Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high-probability returns in the financial markets for additional income to change your life. Grant applies consistent, high-probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high-probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hey everybody, welcome back. This is Grant. So today, what's today? Today is January 16th. Did you see the news? Today, Bitcoin shed 20% of its value. That is a lot of volatility. But you know, in any market, you need it to be a two-sided market. So this kind of adjustment somewhat expected, albeit I think 20% is a big adjustment. When I saw this, it prompted me to talk about the ability to handle a loss. Now, while this is a big drop, I'm talking about more reasonable losses than that. My comments are really targeted to markets with liquidity, right? Where there's some level of confidence that you can exit the market with little slippage. So years ago, I read a book from a trader who said that the common thread he had seen of those who could not invest well or trade was the inability to take a loss. And at first, that seemed somewhat counterintuitive, but as I studied it further and then applied it to myself, I learned he was right, that the ability to properly handle losses is one of the most necessary skills needed. Now, the challenge with this is there's this fundamental human element that's at play, right? And that is the need that each of us have to be right. In fact, we work very hard as humans to be right. We will try all sorts of tactics to come out being right in whatever the situation is. And that includes investing and trading. However, investing and trading is going to require you to address this human element directly. And it'll force you to take a loss. And ironically, what you have to figure out is how big that loss is. All right. So the inability to take a loss typically means that bad habits are formed. And then when the loss actually occurs, it's actually much bigger than what it could have been if you had just had decent stop management in place initially. So some psychologists have suggested that this is the key to investing and trading. Whether or not that's true, what's critical is developing the mindset to break the need to be right and to establish the discipline to do what is best for you. So that's a mental shift. We have to get out of the mode of thinking, I can't do this because I'm taking a loss, I'm a failure. No, that is part of this business. The best thing for you in some cases is to take a loss. So always think about this in the manner of what's best for me. Is it best for me to take the profit now? Is it best for me to take this loss? And it's a managed loss. It's a controlled risk that I know going into it. And I know lots of groups talk about this, and it's the critical thing to do is to have that. So don't forget, this is always about protecting your capital first, right? We've talked about that several times, followed by making a profit second. Now, doing the right thing for you is not always about taking a profit, right? In many cases, right, it's about taking this controlled measured loss that I'd mentioned. Now, one of the most critical aspects of investing and trading is to define your stops. And I'm sure you're already familiar with those, but it reflects the level of risk that you're willing to adopt. Now, to do otherwise is treat this as a gambling exercise, and we're not interested in that. So having a stop loss means that there's some trust in the trading system that you're using and in the criteria that you're using for entry. So you may need to spend some time, you will need to spend some time figuring out that trading system and what that is. In practice, though, it's a best practice to define the stop location first and then the entry. And so that's another mind shift, right? Lots of times we don't do that. We get focused on, what we can earn, right? We get focused on that part, and what that does is it creates, it gets our eyes and our brain wired to just focus on the earning potential rather than on the protection part of this. And so often it leaves us with bad protection or no protection in terms of our investment and our position. So, there are multiple techniques for defining a stop, of course. So, number one, there's some kind of reference line, like a support or resistance line. Some people use that. Another is a recent pivot location. Another is some indicator, like a moving average line. Those tend to be common. I've seen some people use parabolic SARs, if you know what those are. In any event, if you don't have a stop management strategy, then spend the time. That's the call to action here. Spend the time to get one now before you enter your next investment or your trading position. So that's it for now. Thanks for joining. Until next time, get your stops figured out. In this business, it pays to lose the right way. My name's Grant. Thanks for joining.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.